Good evening, guys. Let's do it. FOMC 1.5 minutes. Ooh, will we get our partials, second partials on GJ? We've been trying to get it for a while. It looks like we might just break the highs and get it. Oh, nice. $45. Alright, FOMC. Guys, this is a trade now. यहाँ पे डाल दें जी. Okay, volatile. ले रहा. Alright guys, only the first minute of the news. Same rates, as expected, same rate. Last month it did this, on the last FOMC. It was not last month, it was in Jan, yeah. Last time it did this, where she dropped down on the news. And then we started coming back up. So let's see, this time we went up. Let's see what we can catch here. Where? Side limit है ना?
Okay. मैं बोलूँ मैं place ही नहीं कर सकता entry. Then I see something fishy.
Side stop ऊपर नहीं जा सकते ना? लगा दी entry. Alright, we're pushing.
It's related to the setup. So I hope the market is set up a trade. I not recommended a person as I can't trade on person also.
Alright, a quick push. See, I was thinking if we get this 1 minute break of by 20. Nice. That's nice, DJ. Third partials. डायग्राम पे अपडेट किया? होने वाला है. Alright, chat 15 pips up. Chat, this is the trade. We are in this one. Let's scoot this over. Actually, leave it where it was. Alright, with this 5 closure coming up, we want a no top wick actually on this. Would be nice. Let's see if this works out. हाँ. Alright, we're just running through. So 5 close, no bottom wick, no buys for us. Okay, perfect. We came down for a bottom wick. That's why you don't enter on buys or anything. You know what seen happen is this 15 closes bullish, next 15 closes bearish, and the 15 after closes bearish. नहीं 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 So let's see if we get this. We got this last time on FOMC. A bullish closure on 15 and then 15 closure bearish and then the next one 15 closure bearish. So this may be the start of the rejection wicks, but we still got 5 more minutes. Damn, 60 pips. Close full now. Mm. Let's look in this 1 minute breaking high on news. We managed to get up 80 pips, so about 20 pips to secure a position. Not bad. News breaking high again. Risky trade though. Tops are very high for that. You can't hear. कौन सी 15 pips count है it did. Third partial hit. जाने दो और man, it tapped right on it. Let's zoom right in. Just shy. 0.39, so by 0.1 pip. 0.1 pip. Alright, let's see. 15 minutes. Where are we gonna close? We don't have an E bottom wick, so what you're gonna do is use this as a top wick for us to flip down on the 4 hour. It is a new 4 hour open as well. Oh wait, sorry, that happened 1 hour ago. Ooh. Okay, so it's not a new 4 hour open. So we closed bullish on the last 4 hour. We are bullish right now. Doesn't have to flip. Look in the structure. But if it does flip, there's some sell stops coming down, guys. उससे नहीं फर्क पड़ता. Okay, 5 flipping bearish. This new 1 minute coming up. Although this 1 minute has closed right at resistance. Alright, let's see what we get. Did you flying? Alright, 5. Nice. You had taken right up there, maybe 6 pips. Yeah, you can be quick. Close at 10, almost at 10 right now. Do we get 10? We got 10, there we go. And you get out. Or go break even, but that was the move. Anyway, 15 minutes closing up. And with 15-minute closure, I want to see a top wick on the 15 going up. Then we can maybe try some sells. We can maybe try sells. I think I'd go low risk, stop loss will be higher, and yeah, and then be a bit unreliable trading right now. But I want to see a wick fill up here. Minimum this zone, like 50% of the wick needs to be filled for me to even try. But this could be a bottom wick for us to group up anyway. Yeah, chat, just wait. But don't forget to drop a like, subscribe, and follow all our socials. तुमने रखा है आई नहीं ओपन है $3 तो बन जाए ओपन ही रहने रहने I'm trying to see some levels here on the 5. One closure above. This level likely. ऊपर है नीचे 100 pips. ये Alright, we're driving down nicely. Still need to see a wick up here at 71. So yeah, as expected, there's a resistance up here, 71 tap, and we can see gold come down. But we tap 64 first, so this 15 can flip and stay bullish and break all the highs again. Let's see. We wait for a few 15 closures. Another news coming up, press conference, and that will move the market as well. So let's just hang in tight here, have patience. Right. Nothing matters here, guys. It's all about analysis. So will we start breaking highs here? Yeah. I wanted to tap here 71 for sales. We didn't get a tap and we got the run down to our 64 target. But we got 64 tap first. So there's a chance we flip on 15. If we don't flip on this 15, next 15 can flip. So we will stay out of this market. And 30 minutes and also the 1 hour doesn't have a bottom wick, so we can't take buy space of those higher time frames. Just why we wait. But let's see, this 5 doesn't have a bottom wick, so there is a chance it comes back down. Right side 15 did close bullish. Alright. No top wick, no bottom wick, and we got the press conference. So we wait for 30 minutes at least. Where they 90.
The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high, ongoing, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand.
Let's listen to what Mr. Jerome has to say. I'm gonna mute the music and let's just hear what he's saying.
High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain
Right, chat, no topic. That's why you never enter any buys. If someone did try get buys, I guess you could secure something at 10 pips. But we went down heavy. But at this point, we're gonna wait for this hour to close out. But I'm not sure if we're gonna get any trade based off that, honestly. Anyway, let's continue listening to Jerome.
to the target range for the federal funds rate. The committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you. Microphone. Steve Leisman, CNBC. Mr. Chairman, the projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming as I pointed out in my opening remarks. We did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down. And so.
When you, just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that. We'll bring it about.
Rachel. Hi, Chair Powell, Rachel.
Oh, something happened. What happened here? One sec, guys. I don't know what's happening. Let me change this. Okay, that's back. Let me try bring this back. Ooh, one sec, guys. I don't know what's happening. Alright, we're back. I don't know what just happened there. Why? It's working? Everyone? Why? We're good. Oh, Powell's gone. Bring him back.
If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed?
Right, with this. So we did manage to move. No bottom week again. You're not getting wicks to take potential buys. I was thinking the 30 flip buys, and it just pushed straight up nicely. But yeah, 30 closing, actually no, 15 closing now. Yeah, just not sure if you get what you need here. We broken lows, we broken highs. Just wait.
We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall to that point. But you know, we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, you know, we wanted to be careful about that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that, you know, you still need? Or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of looking at the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
But, I mean, just a question of, I mean, is there even enough data for you to be able to?
We'll take,
I'm sorry.
you know, things can happen during an intermeeting period if you look back. Unexpected things, so I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process.
Alright guys, got 11 minutes on this 1 hour closure, and we are closing above. Yeah, we're back in the all-time highs now. Considering the momentum we had, 150 more pips to go. And this is not a good news. Trading was hard during this all-time highs. As soon as we started coming down, we got good trades then. Now it just keeps pushing. Yeah, still pushing. Yeah, we already wick filled here. So this could be a rejection zone, but gold close above 2171 and range for a while. It may not get out of this range for a bit. But let's see. We'll see. Only buys were based off the 30-minute. Lower time frames are not giving you wicks, so we can't trade those time frames. But let's see where we close here in 3 minutes left. Let's see where we close.
Down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now, and in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color on
Hi chat, closure on the 5 coming up. We got a wick down here now on this one, but we close bullish. We'll see if we close bullish. It needs to pull back nicely. If it doesn't pull back, no trade on this 5, because next 5 there's a chance we'll reject. Well guys, the stops are very huge here. I don't think it's worth trying to take trades in this range. Usually avoid FOMC pretty much. It's very volatile. Like look at the 1 minute. Like 1 minute looks like normal, right? But just 1 minute candle is got 35 pips in it. How are you gonna be trading these ranges now? But that was the 5 close. Yeah, with the way this 5 close, right up the resistance area, we do not want to trade to buy. And I'm also sampling this actually. When you see a bottom wick like this, a huge bottom wick, and a very small top wick, that means the next candle has a higher chance to reject, so it will close bearish. Which actually is what we did the same on the 15 closures we had from morning. Was it 15? No, I think it was 1 hour. 1 hour. Where did I see it? It was 30 minutes actually. Yeah, there we go. I don't remember where I saw it. But anyway, this volume on the 30, man, crazy. This was first 30 of the FOMC, 180 pips. Second one made 200 pips move. We are already up 250 on this 1 hour candle. Now, yeah, and there'll be no buys, guys. We're already tapping zones. There's nothing else for us to tap. I mean, you can say this is the next one, then this. Just it's all time highs. I don't want to trade this personally. Damn, just pushing hard. I don't know what it did here. It came down to grab orders again to push up. No. Alright, chat. Time to call it. A huge push. Kinda spoils the plan. Kinda spoils the trend line we were making to come down. Spoiled it. Spoiled it for us now. So what that means is some more days of waiting around with no many trades going around. I really don't want it to go in all-time highs again. Oof, I was sad on this daily closing bearish, you know. This daily close bearish, it would be nice. But it can happen now still. You never know. Yeah. 30 closing up, we're closing all the way above. It tapped all the areas I needed to tap. Alright, let's see what can we see. On the 30 closure, we want to see a close. Yeah, it's not closing above. Yeah, it didn't close above. Yeah, nothing can trade on the higher time frame anyway. There's nothing for us to grab. Market is volatile enough. 5 minutes, I mean, we don't have any bearish closures to really see if it wants to support resistance here or not. Thing is, the candle we entered in, it might be the wrong candle to enter in. But anyway, we're gonna call it now. Quick short stream. Prices in didn't really move the way we wanted. If FOMC pushed the coal down today, I think we could have set a bit longer because there's so much potential on the downside. There's lots of trades to be had. We do not want to be in this trade, in the buy side. However, if you take any orders, if you take any trade, it will be on our Telegram. Link is in the description. Join up there, it's free. But I'm gonna go now. Alright. Bye.